Inflation falls to 6.62% in January, the lowest in 3 years. Dr. C. Rangarajan, Chief Economic Advisor to the Prime Minister, predicts a further fall by March, even as economists say that the latest numbers may give the central bank more headroom to cut rates. India's top lender, the State Bank of India's third quarter profits rise over 4%, well below market expectations. The stock takes a beating as bad loans rise. Chairman Protip Chaudhuri says that there are clear signs of an improvement in asset quality. Tata Motors' third quarter profits tanked 52% to around 1,630 crores on poor domestic demand. Had it not been for its British subsidiary Jaguar Land Rover, its loss of over 400 crore rupees. International ratings agency Fitch warns that fiscal deficit may well exceed the government's target of 5.3% this year. Also raises the red flag on poor fiscal health of state governments, saying that their high dependence on petro taxes could derail their fiscal plans. Finance Minister P. Chidambaram will meet state finance ministers on the GST rollout later today. Sources tell ET now that Chidambaram is likely to push for a consensus so that he can unveil the GST roadmap in the forthcoming budget. Those were the top stories at 4. Let's get to the action on Dalal Street then. You had the Nifty, which had quite a bit of trouble sustaining above 5,900 after most of the European markets too saw quite a bit of selling pressure. You had capital goods, metals and telecom stocks which sold off, and we completely ignored the inflation number. In terms of the broader markets, they bled absolutely severely. Those were some of the sectoral movers in today's session. Big cuts coming in there, 1.5% and over 120 points cut for the small cap index. Some of the big losers then today: Siemens sold off, you had Bharti Airtel deep in the red, BPCL despite positive news, as well as a power grid. Some results then for today. Dr. Reddy's disappointed. The profits came in lower by 30% almost at 363 crores, and the net sales stood at 2,865 crore rupees. The EBITDA came in low at 590 crores and margins contracted to 20.5%. LIC Housing Finance took a big beating post its numbers. The reason being that the profits were lower by 23% at 236 crores. Net interest income came in higher by 13.5% at 369 crores. And the provisions were at 32 crores versus 7 crores on a sequential basis. IVRCL also put out its numbers, and it was really individual stock reactions to the quarterly numbers, and all of them seemed to have a pretty dismal report card. So IVRCL, it was a loss of 68 crores versus a profit of 6.8 crores, and the top line growth inched up marginally to 1,247 crore rupees. GVK Power, pretty similar picture. The loss widened significantly to 57 crore rupees versus an earlier 14.5 crores, and the top line growth came in lower this time by 13% at 649 crore rupees. In the pharma space, you had Walkout. It came out with a good set of numbers, but remember, there's been a strong run-up in this stock already. So the profits were at 428 crores, up a good 93%. Net sales were higher by 20%. You had the EBITDA margins, which came in at 37.9%. And in the third quarter, there was an exceptional gain of 11 crores versus a loss last time around. SCI from the shipping pack put out its numbers, and this time around it was disappointing, and that's why the stock bore the brunt of it, down by almost 5%. The loss at 75 crores and the top line growth at 1,011. India Cements put out its numbers as well. So the profits came in lower by almost 54% at 26 crore rupees, and the top line growth was at 16%, 1,090 versus 941 crores. Quite a few stocks in focus. Telecom took a bit of a beating as the DOT issued a notice to the companies to pay additional revenue for the spectrum usage in 2008 onwards. So Bharti Airtel got a notice of 1,200 crore rupees. Maruti Suzuki was down as the MSCI rebalancing news impacted the counter. It's been excluded from that. Siemens and Wipro, remember, they have been excluded from the Nifty. And you had IndusInd Bank, which hit a new high, in fact, as well as NMDC on the back of the news that of their inclusion in the Nifty. So those counters did well for themselves. JSW Steel, on the back of results impact just yesterday, a loss of 73 crores versus 47 crores. The top line growth came in at 8,866 crore rupees, marginally higher, and a forex loss of 268 crores. Some of the big index gainers then, you had GAIL, Unilever, Tata Steel did well for itself despite a very dismal set of numbers. Most of the brokerages had mixed views on this one. And HDFC Bank too was in the green by the day's close. But some of the top earnings then for today, you have Tata Motors, which put out its third quarter profits, which tanked 52% to around 1,630 crores on the back of poor domestic demand. However, had it not been for the British subsidiary Jaguar Land Rover, the loss could have well crossed 400 crores. Let's get in Yatin Mota, who now joins in with more perspective on the Tata Motors numbers. Yatin.
Well, clearly, Aman, it was a disappointing quarter from Tata Motors, especially the standalone performance, wherein we saw some bit of operational issues because of lower volumes, and we also had certain pressure as far as the costs were concerned on a standalone basis, and that is the reason why they posted losses of nearly 400 crores, over 400 crores rather, on a standalone entity. But as far as JLR is concerned and the consolidated performance is concerned, more or less, in line with street expectations, we had JLR, wherein they posted a revenue of close to 3.8 billion British pounds. Their EBITDA for the quarter came in at close to 533 million British pounds, which is almost near an estimate of close to 540 million British pounds. So clearly on the operating front, JLR has posted a satisfactory margin number of 14%, and also we have the consolidated results which were impacted by a one-time forex loss of 174 crores. Of course, you have the domestic business which continues to remain under pressure because of lower demand for the commercial vehicle, truck as well as passenger car, wherein we have seen a volume decline of nearly 10% in third quarter. So clearly on the domestic front, the results have been quite disappointing. Satisfactory, I would like to say, for JLR, but possibility of a stock negatively reacting to its earnings because of the a disappointing consolidated and standalone results. But most of the analysts have been recommending a buy on declines as far as Tata Motors is concerned because of the satisfactory performance as far as the JLR is concerned.
Thanks very much, Yatin, for giving us those details. 297 for Tata Motors on last tick. From the banking space, India's largest public sector bank, SBI, put out its numbers. The profits for the third quarter came in way below what the street was expecting at around 3,400 crore rupees. You had the asset quality, which continued to remain a concern for the bank. The Q3 gross NPAs stood at 2.59%. Net NPAs too came in at 2.59%. You had, let's get an Anirudh Ghosh then, who joins in with all the number crunching. Anirudh.
Yes, it's been a disappointing set of numbers from State Bank of India. A flat 4% growth in net profits compared to a market estimate of about 10% growth in net profits for the quarter. In fact, the main point of concern remains the asset quality, the fact that there's been a net slippage of 4,000 crore rupees and fresh slippages to the tune of 8,000 crore rupees. Of course, given at a time when the SBI management has been saying time and again that they're expecting the asset quality to improve going forward, this does seem to be quite a surprise for the markets as well as for the analysts, and of course they've taken it in a very negative sense as well. Also, if you look at their net interest income, that also has come down this time around, though the management did clarify that of course is on account of a technicality because pension accounts have been taken out from the net interest account fee. So clearly their interest accounts on their loans do remain to be robust also. The fact is that, if you look at their margins, they've also managed to maintain their margins at 3.72%. Going forward, they're also expecting to maintain margins at these levels or in fact improve them from here on. Also, if you look at their credit and deposit growth, they've been robust and well above the industry standards at about 17% for credit growth and 15% for deposit growth. Going forward, the management, of course, expects to maintain credit and deposit growth at these levels. They're also hoping that asset quality does improve, but they did actually mention that asset quality has been a little lower than what they were expecting. And of course, a few sections of the economy haven't improved as per their calculations, and of course, that's the reason why they've seen such a rise in their NPAs this time around.
This quarter also saw continuing challenges in the asset quality, but we think that we are coming to the end of that because some of the assets which fell into the restructured category and the NPA category are likely to come back, but that's a forward-looking statement. Our gross NPA plus restructured assets account for 7.66% and our net NPA plus restructured assets account for 4.88%, ratios which think are much better than the industry average. And where the NPAs are coming from, our large corporate book has held very well. The NPA is very low at 0.51.
Moving away from that to some macroeconomic data which came in for today. Inflation for the month of January fell to 6.62%. That's its lowest in 3 years. The manufactured product inflation stood at 4.81%, and that was at its lowest level since December 2009. Food price inflation, however, rose slightly to 11.18% on the back of higher prices for onions. The primary article inflation stood at 10.3%, while fuel group inflation came in lower at 7.06%. The Planning Commission's Montek Singh Ahluwalia says that the future data could be more benign.
Inflation is coming down slowly, not as fast as we would like, but is clearly on a downtrend. So that's very good, it's very encouraging. You could argue that inflation is still above the comfort level, and it should come down further. The fact is it's coming down. In the case of growth, on the other hand, it's way below what is a natural growth rate for this economy. So we ought to focus on how we can revive growth, and I think many steps that have been taken will actually encourage that revival.
Now, Fitch's India arm, India Ratings, believes that India will miss its fiscal deficit target of 5.3% and that the state government's dependence on the petroleum sector as a source of revenue may pose a risk to the state's fiscal plans. Let's hear Mrinalini Krishna in conversation with Devendra Pant on the same.
This time we expect the fiscal slippage will be of the moderate order. We expect a slippage of roughly 30 basis points of GDP in this year. And primarily there are a couple of reasons for that. State government's revenue from petroleum sector is going very strong. In the first half of this fiscal, the state government's receipt from the petroleum sector increased by 15%. Number two, unlike last time, we don't have the negative impact of the salary revision on state finances, and because of that, there was significant impact on state fiscal profile during 2008-9.
So what are the biggest threats that you see to state finances and their debt positions as far as this year is concerned? What is something that can derail the fiscal plans for the state?
Well, the state has their dependence on oil sector as a source of revenue in their VAT is increasing day by day. So there is a concentration risk on the state government finances on petroleum sector.
Meantime, in today's meeting between P. Chidambaram and state finance ministers, they will be deciding if the union budget later this month will have any announcement on the broad contours, the timeline and the amendments required for the rollout of the ambitious GST. Suchetna Ray now joins in with those details. Suchetna, what can we expect?
Today's meeting is one of the most important meetings between the central finance minister and the state FMs in the long, arduous path that GST has taken and the many battles that the states have fought for this ambitious indirect tax in India over the last 5 years. In today's meeting, it will be decided whether P. Chidambaram can actually go ahead and make some important announcements in the budget this year, announcements regarding the broad contours of the goods and services tax, regarding its timeline and also the amendments that will be required to roll out this indirect taxation regime. Sources tell us that in the meeting that was held last month in Bhubaneswar, that was indeed a breakthrough meeting, a meeting which decided the states will have the autonomy to decide whether they want to adopt GST. The states will also have the flexibility of rate. A band will be set in which there will be flexibility for the states to decide the GST rate. Also about the product basket, a very contentious issue over which states have fought for years. It has been more or less decided that all products will form a part of that basket which will be subjected to GST apart from sin products like alcohol. Even about the very contentious CST compensation, sources indicate that the centre has decided to the centre has agreed to make a payment of about 34,000 crore rupees, which is the compensation due to the states since 2010 to 2013. Today's meeting is looking at ironing out and fine-tuning these decisions further, after which P. Chidambaram, the stage will be set for P. Chidambaram to make an announcement in the budget.
Thanks for that, Suchetna. IS Gopalakrishnan, co-chairman of tech major Infosys, expects 2013 to be a better year for the IT sector than 2012, as there are far more deals in the pipeline. In an exclusive chat with ET Now's Chandra R. Srikanth, Gopalakrishnan says that global sentiment is turning positive and that the economic recovery in India and China will only boost sentiment further.
2013 is going to be better than 2012. Now, how much better is difficult to say at this point because the external environment continues to be uncertain. It is positive, and I think we need to leave it at that at this point. Is it a turnaround? Probably yes, because I believe that 2012 probably was the low point, and things should improve. A lot of the uncertainties which were there in 2012 are no longer there. There's no concern about Europe breaking up. There is no concern about the election in the US. Election is over. So a lot of the uncertainties, and then growth has come back in China. Maybe India will also see now growth coming back. So a lot of the uncertainties have gone away, and that is the reason why I believe 2012 was probably the low point.
But in terms of budgets, visibility, are we at a better position compared to 2012 in terms of the demand that's coming out of the deal pipeline that's there for companies?
So clearly, if you look at our own, outlook at the end of Q3, the deal pipeline is strong. We had significant wins in Q3. So things are at a better position than 2012.
With that, we're completely timed out on this edition of Business Day. Thanks so much for watching.